What is up, traders, and welcome back to Explain the Charts. Today, November 26, 2025, we are taking an in-depth look at Meta Platforms, symbol Meta. The stock has been on a tear the last couple of days, and the news cycle is buzzing with a potentially game-changing development. Reports from multiple outlets indicate that Meta is exploring a multi-billion-dollar deal to purchase AI chips, specifically tensor processing units or TPUs, from Google's parent company, Alphabet. This is huge news because Meta has traditionally been one of Nvidia's biggest customers. This move signals a strategic diversification for Meta, potentially reducing its reliance on Nvidia and possibly giving it more pricing power in the future. The market has reacted very positively to this news for Meta, as it's seen as a strong, forward-thinking move to secure its AI infrastructure. Conversely, Nvidia's stock took a hit on the news, as investors are weighing the impact of increased competition in the AI chip space. Now, let's see how this massive news event is reflected in the price action. Looking at the daily chart, you can see these last two powerful green candles right here. Yesterday, the stock surged 3.78%, closing at $636.22, a very strong follow-through from the initial rally on Monday. This move is a direct reaction to the AI chip deal reports. Let's zoom out to get the bigger picture of where Meta has been this year. The stock hit its 52-week high back in August, up near $796. However, you can't miss this massive gap down that occurred right at the end of October. This sharp drop from around the $750 level was due to their third-quarter earnings report. While revenue was strong, a large one-time tax charge hit their earnings per share, and their forward guidance wasn't as aggressive as investors had hoped, leading to this major sell-off. Let's narrow our focus to the period from that earnings drop until today. After the initial plunge, the price found a bottom around the $600 mark before falling further to establish a more solid support base near $580 in mid-November. You can see how the price chopped around in this range for a few weeks, building a cause for its next move. The news about the Google chip deal was the catalyst that ignited this powerful breakout from that consolidation zone. Now, the most critical area to watch is this massive gap left from the earnings drop. The bottom of that gap sits roughly between $650 and $670. This area will likely act as a major psychological and technical resistance level. A decisive break and hold above this zone would be incredibly bullish, as it would signal that the market has fully absorbed the negative earnings reaction and is looking ahead to the future. On the flip side, the recent support established around $580 is our key level to watch on the downside. Now, let's switch to the 1-hour chart to get a closer look at this recent rally. Here we can clearly see the explosive move that started on Monday, November 24th. The stock gapped up significantly at the open on Tuesday, moving from a close around $613 to an open of $624. It then pushed higher throughout the day, reaching a high of $637 before closing strong. The low of yesterday's session, right around $618, now serves as a crucial short-term support level. As long as the price stays above this level, the immediate bullish momentum remains intact. We can also see that after the initial morning surge, the price consolidated sideways for the rest of the day, which is a constructive sign. It shows that buyers were able to hold the gains without significant profit-taking pressure. Drilling down to the 15-minute chart gives us an even more granular view of yesterday's action. Notice the immense volume that came in during the first hour of trading as the news spread and the stock gapped up. This high volume confirms the conviction behind the move. Throughout the rest of the day, the volume tapered off as the price entered a tight consolidation range. This pattern is often seen in strong trends, where the market takes a breather before its next potential leg up. Traders will be watching this consolidation range for a breakout in either direction at today's open. Okay, let's pull back to the daily chart to recap and discuss what we should be looking for next. The short-term trend is undeniably bullish, driven by very positive fundamental news. The long-term trend, despite the October pullback, also remains bullish as the price is well above its lows for the year. Let's summarize the key price levels we've identified. Our primary resistance zone is between $650 and $670, which is the bottom of the late October earnings gap. Above that, the next psychological target is $700, followed by a potential retest of the all-time highs near $790 if the bullish momentum is sustained. For support, we have the short-term level at yesterday's low of $618. A more significant medium-term support area lies between $580 and $590, which were the November lows. So, what are the likely scenarios from here? Given the powerful catalyst and the market's reaction, I believe a test of the $650 resistance zone is highly probable, let's say a 70% likelihood in the coming days. If the broader market remains strong and there's no negative follow-up to this news, a breakout above $670 would reinforce this bullish case, opening the door for a much larger move higher. The bearish scenario, which I'd place at a 30% likelihood, would involve a failure at the $650 resistance. If the stock gets rejected there, we could see a pullback to test support at $618. A break below that level would signal that the initial excitement has faded, and a retest of the $580 to $590 support zone becomes much more likely. Things to watch for will be any official confirmation or denial of the deal from Meta or Google, as well as the price action of Nvidia, which could give clues about sentiment in the AI sector. Also, keep an eye on overall market sentiment, as a broad market sell-off could easily derail this rally. That wraps up our analysis of Meta. Remember, this video is for informational and educational purposes only and is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions. If you got value from this breakdown, please hit the like button, subscribe to Explain the Charts, and ring that notification bell so you don't miss our next video. Thanks for watching and trade safe.